I want to quickly talk to you about elevation capital. So if you're looking for a business funding and you're looking for sources to get money, elevation capital can really help you because they are in a specific space that you might want to explore. And this is what I want to do into this conversation. I want to help you understand what elevation capital can do for you, how you can borrow money from the company. So let me first define for you what elevation capital is and what it's not. Okay. So basically, this is an online financial services company. And so what they do is that they are in the alternative lender space. Okay. So this is a private finance company. Okay. This is not like your traditional bank. This is not your traditional credit union, which means what? It means they can come up with credit solutions to help you get the funds you need to actually expand your business. Okay. And the cool thing about Elevation Capital is that they offer several types of funding for business owners with low credit scores. So if you have a FICO score of 300, 450, 579, or whatever, basically you can actually count on Elevation Capital to fund you the funds that you really need. The only thing is that they have no problem if you have bad credit, okay? But you got to be in business for at least 6 months to actually qualify for a loan, and you also have to generate high annual revenue. So you can't just have bad credit and no revenue to actually no, you got to have revenue. So the company has been around since 2010. So it's about more than 15 years now. It tells you a lot about their credibility, okay? And they have provided over $150 million in loans to over 2,500 businesses nationwide. So and their portfolio is growing all the time. So, and the thing is, they are coming to market with innovative solution when it comes to funding. So that's really good. And the company is in Bel Air, Maryland. Okay. And that's kind of cool because of the flexibility they have. So how does Elevation Capital work? Now, I want to really talk to you about the available programs that you have with Elevation Capital. First, you have Merchant Cash Advance. Here, the advance amounts go from $10,000 to $3 million. And the terms, you're looking at 12-month average. And the factor rate here is 1.12 to 1.24. And the origination fee goes from 0.5 to 1%. Another product that Elevation Capital has besides MCAs is invoice factoring and accounts receivable financing. Okay. So here the amounts are way more, I would say, flexible because basically this is a revenue-based financing program. When I say invoice factoring and accounts receivable financing. So, I mean, it's the same thing with MCAs, but invoice factoring is way more direct. So the advanced amounts go from $5,000 to $10 million, depending on the underlying receivables that you are financing and the quality of your customer base also. And so if you receive up to $10 million, you have to repay it in about 4 months. Okay, they don't give you 1 year or 5 years or 10 years. No, with accounts receivable financing in general or invoice factoring, you have to think about less than 4 months, a maximum 6 months. And the factor rates here go from 1.12 to 1.24. There is no origination fee. And so basically a factoring arrangement typically provides 70% to 90% of the invoice amount, called an advance rate. The process allows you to convert the assets in accounts receivable into liquid working capital. So your your sales that you have on your books, and instead of waiting for the customer to pay you within 90 days or 60 days or even 30 days, if you need cash real fast, an accounts receivable financing program can help you big time. You also have inventory and purchase order financing. So this is also another popular product that basically Elevation Capital has. And here again, you have a pretty flexible amounts. You have we have $100,000 to $10 million. So this is the range I want you to look at. $100,000 to $10 million. You have a 6-month repayment average, and factor rates are pretty decent too. You're looking at 1.12 to 1.36, And but the only thing is you have to mind the origination fee. They're charging you 2%. There is an origination fee. It goes from 2 to 2.7%. Okay, but hey, listen, if you need cash real fast, maybe to take care of business, to pay your staff, or to expand your business, or to seize an opportunity, like you have a good supplier deal, for instance, that 2% you paying you to Elevation Capital shouldn't be a problem because the ROI for your investment will be higher anyway. So those are the some of the products that they have: MCAs, merchant cash advance, invoice factoring and accounts receivable financing, inventory and purchase order financing. So what have you noticed here? You would have noticed that they don't offer like a traditional business loan. They don't offer a traditional business line of credit. Okay, they don't offer equipment financing. So, but hey, listen, it is understandable because they're targeting entrepreneurs who have low or no credit. So the entrepreneur has to be able to collateralize the loan somehow. And so MCAs, invoice factoring, accounts receivable financing arrangements, inventory and purchase order financing, all these are collateralized financing. So you're not going to get unsecured financing through Elevation Capital. So what are the qualifications for Elevation Capital? Well, you got to be, I think I've said this before, you got to be in business for at least 6 months. So if you are a brand new startup, you're not going to qualify for financing. Also, if you don't generate enough revenue, like if you don't generate high revenue, you're not going to qualify. Why? Because they want you to have an annual revenue of $150,000 minimum. Like that's the minimum. Okay, that's way more than 10 grand a month. Okay, so something to really think about. Okay, now when you have those two quantifiable metrics actually down packed, your credit score doesn't matter that much. Okay, it doesn't really matter that much because Elevation Capital just wants to make sure that you're making at least $12,500 in a monthly revenue. Here I'm speaking about gross revenue, so this is not your net, this is your gross, okay? And they look at the volume because one thing they don't like is seasonality. Because remember, if you take a product like MCA, for instance, they have 4 months, right? And if within those 4 months you're having dips in your revenue, that's not really good for them. So that's why they want to have a stable, gradually rising sales metric. Okay, so credit score requirements depend on the funding products. So for MCAs they want 500, for invoice factoring they want 550, and for inventory and purchase order financing they want 600. But I can tell you that even if you have low credit score, but you have a high revenue number, basically they will work with you. Okay, Elevation Capital will work with you. So let me talk to you about how to apply to Elevation Capital. So if you want to really join the ranks of satisfied Elevation customers, you have to understand that first of all, you want to complete the online application. So if you don't want to go through the online application, give them a call. Give them a call. They have a toll-free number. I can give you the toll-free number later on or in the comment section because they change the toll-free number all the time. But you want to give them a call or fill out the online application form with information about yourself, your business, and how much you need to borrow. And from there, they will start actually. They will ask you more paperwork, so you need to upload the 4 most recent business bank statements with your application, right? So, and those are the basics because they need to verify your revenue. They need to verify your cash inflows. The thing is that the reason why they ask business bank statements is because basically you can have a number in your P&L, in your income statement, but that's not your liquidity flows. In other words, you have the sales in your book, but you don't have your customers don't pay you on time. You have a gap in funding. You have a gap in revenue because customers are taking so long to pay you. So that's why they pay attention. Of course, they pay attention to revenue, but they pay attention also to liquidity. That's why they're asking for your business bank statements. Okay. And also, once you actually provide that preliminary paperwork, somebody from Elevation Capital will contact you to actually discuss more, right? They will ask you to provide maybe your uh, your business tax returns for the last 2 years, your 1065, your 1120 years, or your 1120 tax form, so they can see actually if there is consistency between what you have in your P&L, in your financial statements, but also your tax documents, but also your business bank account statements. So once you actually and then you have to decide if you are looking for an MCA, an invoice factoring arrangements, an accounts receivable financing arrangement, or an inventory and purchase order financing program. And you have to choose your program, and then normally within 24 hours after approval, you'll get your cash, you get the money wired into your account. So before I talk to you about the advantages of Elevation Capital and the disadvantages, you need to understand that the repayment process will depend on the product you receive, right? MCAs are repaid with a percentage of your sales. So, and this can be a little convenient or inconvenient depending on how you set up your business. Okay, so that's something to really remember. And so basically, with Elevation Capital, they have something called a holdback rate. That's a percentage of your sales that are dedicated to repaying the MCU you just got. Okay, that means the amount you pay fluctuates with your sales revenue. You will either have daily or monthly payments. Invoice factoring repayments depend on when your customers pay their invoices. Usually, the factor rate gets applied every term the invoice goes unpaid. For example, let's say you issue invoices on net 30 terms, meaning your customers must pay within 30 days. The factor rate gets applied when you first receive the advance, and if your customer pays late, the factor rate gets applied every 30 until the invoice is paid. So late paying customers can drive up the factoring cost significantly. And also with purchase order financing, the funds go directly to your suppliers. The company receives payment when your customers pay. As with invoice factoring, late paying customers can drive up your costs, right? So basically this sort of funding arrangements force you to actually to maintain a good quality base of suppliers and customers. Now, the company doesn't, Elevation Capital doesn't publish specifics on renewal, such as percentage of the advance you must repay before you are eligible. Okay. However, the company does state that it has a 70% retention rate. So this is pretty good, by the way, if you think about it. So what are the advantages and disadvantages of Elevation Capital? I want to quickly talk about that. So if you take an alternative lender such as Elevation Capital, you have convenience big time, okay? And so basically the application process is quick and easy with a fast turnaround on approval. I've said this before, 1 to 3 days, okay? And once you actually get reviewed and approved, you can receive your funds, your money, as fast as 1 to 2 days. And also, when you think about Elevation Capital, you have potentially high advanced amounts, with MCAs providing up to $3 million and other programs increasing to $10 million, right? You don't need a high credit score for approval, and the application requires minimal paperwork and documentation. So this is really good from a flexibility point of view if you really think about it. And so those are the advantages of Elevation Capital. What about the disadvantages? Well, that's the cost involved if you think about it. But also, you got to be in business for a minimum of 6 months. So I've said this before. If you are a startup, you're not going to qualify through Elevation Capital, okay? And also the revenue requirements, $150,000. That's $12,500 per month, okay? And also you have the origination fee, and this actually adds to the already high cost. So that's really, so if you think about pros and cons, pros, you have quick and easy application with a fast turnaround on approval, fast funding time and 1 to 3 business days after approval. multiple cash advance products and high borrowing amounts, low credit score requirements, and minimal documentation. So that's what I said a little earlier when I said convenience, right? You have flexibility, but again, you are in a very niche lending space. You have no traditional lending products such as business loans or business lines of credit or equipment financing for that matter. You are talking to a specific lender. In terms of cons, cash advances are expensive business funding options, so just be aware of the cost of funding. Some products actually charge an origination fee, long time in business, and high annual revenue requirements, and lack of transparency on renewals, terms, and other associated costs. So if you think about Elevation Capital, you just need to understand the company has been around for many years now, okay? They actually started in 2010. I think I've said this before at the beginning of this show. So this is a legit lender. This is a legit business. This is a legit lending service provider, okay? But they specialize more in cash advance. They're not your traditional business loan provider, okay? Or traditional business line of credit provider as you can get with Chase or Truist Bank or Wells Fargo or Bank of America, okay? But the cool thing is that since 2010, they've actually funded hundreds of millions of dollars in transactions, and they have close to 2,500 customers. Okay, so this is really good because it just tells you there is a proven track record here. So you who are listening to me right now, despite your low credit score, despite your fair credit score, you could also qualify for funding. You can actually have your dreams fulfilled because you have the cash to do what you have to do to be able to expand your business. Okay. But one thing for sure, if for any reason you do not qualify for let's say, for their application because you haven't been in business for a long time, or your business does not generate enough revenue, like the threshold is $150,000 per year. So your business doesn't generate that much money. That's $12,500 every single month. If you don't really meet those, I have good news for you. I have several lenders that I can really direct you to. Just DM me, okay, or let me know in the comment section, and I can certainly direct you to other lenders who can help you with business term loans, business lines of credit, SBA loans, equipment financing, bad credit business loans, okay, working capital loans, and so on and so forth. It's all about flexibility. It's all about accountability, but it's also all about liquidity. As long as you have some kind of liquidity in terms of your business revenue, like you are making a decent amount of cash from customers, you can be sure that you will find a lender who will help you out. In conclusion to this conversation, I spoke to you about Elevation Capital. I defined what the company really stands for. How does the institution work? Okay, what are the qualifications for the loans? How to apply? What are the pros and cons, the advantages and disadvantages? Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.